Let's look at Alphabet, too, because that's a big story today. And what an interesting 24 hours it's been for that name. They have the OpenAI announcement of the browser yesterday, which we were going to get. We talked about it yesterday during this program, right? And then today, there's this report that they're in talks with Anthropic to secure more computing power. So, you know, you go down, you go up, you gyrate around, and here's where the stock is today. It's in the green. Everybody owns it, including, well, not including, if everybody owns it, Surratt, you're on the list.
Now, look, I think the negative news in Alphabet, probably more of the Mag 7, comes out just because of the search issue, right? So anytime somebody comes after their search, the stock is going to react negatively. Now, when they do agreements like this, it's just showing that Alphabet management themselves thinks there's future growth in their businesses, which we like. It's huge cash flow, huge growth. And the stock has kind of reflected that, has come back, from yesterday.
Are you worried about the dominant position that they have enjoyed in search being eroded by various forces? Some we know about, some have yet to come.
I think over time, yes, but they're also investing in their other businesses. So that's what I like about Google at this point, or Alphabet.
You're telling me you could tolerate, as a shareholder, a decline in market share on search, which is their bread and butter,
which completely.
As long as they're investing in these other areas,
and as long as that.
What are these other areas you're talking about?
Well, they own. I mean, you look at in terms of they're competing with AWS, so they've got all that going on for them as well, and I think that part's really growing. That's got high margins. And search is coming down, but it's not coming down like a cliff. And it might come down over time, but they're still the dominant leader, and I think they're going to be a dominant leader for a while.
Weiss, you trimmed the name today.
I did.
What's up with that move?
And I may be on my way out completely.
Really?
And I am concerned about search. What I'm hearing is search could be down this year over about 25%. That's meaningful.
That's what you're hearing?
Yeah, that's what I'm hearing from sources. Nobody knows, but that's the direction. Those are from.
Do you run it into like Sergey Brin at the diner or something like that? Where you?
No, Sergey doesn't read.
Where you? All right.
We
so
all
you got
sources.
All right. Your sources.
I'd say my sources are pretty informed. You can make light of them.
I'm only kidding.
But they're
Weiss,
very
you know
informed sources.
Don't get all. Don't get all in a huff. Continue.
I'm not getting all in a huff. I'm just trying to bring it back to the
Go
research.
Ahead.
So what I'd say is that that is the engine that drives it all. That's what supports Waymo. That's what supports more cloud spending. Right. Now, the Anthropic deal, we don't know what that's going to be. It's being negotiated. Could it be an Oracle-type deal where there's
circularity?
Exactly, circularity, which I think the Emperor's close falling off there. So I believe cloud is going to be the biggest beneficiary of AI, but I've already got lots of cloud. I've got Microsoft, I've got AWS, I've got Meta for their own cloud. So I'll continue to benefit from that. I'm just looking to reduce exposure. I think this is the most vulnerable to being disintermediated by AI and other search mechanisms.
Now, remember what happened the last time we had the conversation similar to this.
May 7th.
The so-called Eddie Q sell-off, right?
Yes.
Comes out in the court hearing. He says, well, for the first time ever, they're dropped. Google search is declining in the browser. We have a conversation that day saying, oh my gosh, sky's falling.
Yep.
Leventhal makes the case that you guys are overreacting, and then the stock goes on this monster run. What if we're in another situation where the reports of the demise of search,
right,
in quotes, is greatly exaggerated?
Yeah, so I'm not paying attention to what competitors say because it's in their interest. And Eddie Q does compete with Google, right? They're in wars, about just about everything. So I don't really care what they say. I take it in. I don't ignore it. Smart guy, legend with Apple. But I'm just looking at what is happening. AI is the most potent force we've ever seen in terms of advancing technology. And it's going to basically give the power to individuals to form their own search. And you've got Anthropic, you've got Perplexity, you've got, OpenAI, you've got so many targeting them, and the resurgence of Microsoft with Copilot as a search engine as well. So it's become much more competitive. It's too important a business to Google. And I think the risk reward of owning this versus the exposure I get in the others for cloud, I just don't need to have it.
I agree with Stephen. The problem that I have with this is on May 7th, I put my hand on the stove sitting here with Josh and Jimmy and got burned. So I'm afraid to do that again. I was made to look like a fool. Steve mentions that I am utilizing momentum, and I am. I'm utilizing momentum as a strategy, when to buy, when to sell. But I'm also looking at fundamentals, and you have an intuitive take of certain things. And I kind of agree with the premise that I don't know, Sarat. I don't know if there's enough there, whether it's YouTube or the cloud itself, to overcome if there is a decline in the market share surrounding search. So I look at a stock that really had strong momentum build late in the summer. It was very late to the Mag 7 party, okay? Now you have people that are getting in somewhat late, positioning's kind of full, and you still have that challenge surrounding search, and I still think it's going to be there. So the valuation argument, people could say it's cheap, I get that, but I still think when you look at this business, if I could get out of the stock, I probably would do what Steve is doing.
Last word to you on that.
Look, I see what you're saying, but I think the valuation reflects it. It's in the 20s, in the low 20s, and it's growing in the high teens. So you are growing into that, but yes, there is that. But what we're looking for is, if the search kind of comes off a cliff, then I think you reevaluate. But if it's a slow burn, I think they've got so much cash coming in that they can buy back shares and still have higher EPS.
Okay. By the way, there was another story that we highlighted earlier this week about on the notion of, they have all this cash, they can buy back shares, whether or not all of the capex that these companies like Alphabet are spending, that's taking away from cash that would be freed up to buy back stock. So you have to make a bit of a choice. It's going all towards capex, towards AI, and maybe a less of a percentage of that money is going to go towards buybacks.
Yeah, and I think for all these companies, they're looking at it as the return of invested, of capital, and they'll make the choice at that point to say, is it worth it to buy our shares or that additional capex we're spending, which then could have ripple effects on the whole AI trade, by the way. So if one of them cuts back.